How many credit cards should you have on your credit report? The answer may surprise you. So here's where it gets interesting. Fair Isaac Company, otherwise known as Fico, they did a survey and took a look at all of the 800 credit scores. And they wanted to have an idea of how many credit cards does the typical 800 credit score profile have? The answer was 11. Now that's a lot. Does that mean that you have to have 11 open credit cards? No, it does not. But what it does mean is that you need to have more than 2. And if you really want to do things correctly, you want to think of your credit cards as like a lane on a highway, right? So what you want to do is you want to build a nice highway. And when you think of yourself going on a highway, it's kind of scary when you're on a 1-lane road. Even a 2-lane can kind of be whatever. Once you get into 3, 4, 5-lane highway, you're just like, wow, this is nice because you get to go fast. There's not a lot of people there. It's just comfortable. That's how the banks will feel with working with you and lending you money or extending you credit. So what you want to do is build out a highway. My suggestion is to have anywhere between 5 to 7 open credit card accounts. You can also mix in some department store accounts. But the other thing that's also really, really important in this, any of these credit cards that you open, you want to do 2 big things. Make sure that these accounts are easy to maintain. I prefer accounts that do not have annual fees. Now, the exception to this is if you're spending a lot of money on credit cards, you want to get some points, or you want to deal with American Express. That's a different video and a different topic at a different time. But for now, for maintaining a credit profile without having to spend tons of money, so this can apply to a lot of people, get credit cards that do not have annual fees. You need to use them once every 6 months. We'll also talk about how to use them. But here's the other thing that you want to do. You never, ever want to close these accounts. Even if you get into a fight with them, which sometimes, let's be honest, it can happen, you want to keep these accounts open, because the longer they've been open, the longer your highway is. And the higher the limit, the wider the road. The more lanes you have, the more people will want to ride with you. That's exactly what you're going for when you have that many open accounts. Now, the biggest problem that people have is after credit issues. They feel like it's really easy to get in trouble with credit cards in this country. They really extend you more than you should. And if you don't have the discipline, or if you're not used to it, or if no one ever talked to you about it, it's easy to get in over your head. And a lot of people have that fear, but a lot of people really commit to not wanting to have more credit after they've had credit issues. And maybe they've defaulted, maybe they've been sued, maybe they've done debt consolidation, whatever it is, but they come back with a reduced appetite. And that is obviously probably the single biggest mistake you can make if you've had credit issues. And you need to understand that you're not going to be able to remove all the negative items off your credit report. And that credit score is heavily dependent on what do you have that's open and active. So if you don't reestablish credit, and you need to reestablish a lot of it and show that whatever happened in the past was in the past, you want to demonstrate a track record. So the more instances that you have of positive accounts that are open and active, that much stronger is your credit going to be, and that much quicker will your credit scores start to rebound if you've had credit issues. Now, what is the other thing to think about? If you are somebody who's had credit issues in the past, your biggest problem is you are heavily marketed to, because you're a very lucrative client. In your head, you think, I've ruined my credit before. I can only accept these crappy cards. And if you haven't opted out, and I'll leave a link down below in this video where I'll show you how to opt out from the pre-screened offers so you don't get all these letters in the mail. And it's the same thing. If you have an account at Credit Karma, they'll give you suggestions. You can take a look at it here. Here's Credit Karma saying, hey, you may be pre-approved for this. They actually even got in trouble for that. That's a different story for a different video. And it's the same thing you're going to see if you go to Experian. They're also going to offer you these cards. But if you take a closer look, take a look at all these offers that this Experian account, so this credit report was a little bit damaged, but take a look at these card offers that they're giving them. They're terrible. I mean, god awful, high annual fees, high interest rates, low limits. And these card companies, they're not big banks. So they don't have the customer service. They don't have the IT infrastructure. They don't have the app functionality. They don't have any of the things that you get from working with one of the bigger banks. That's why I prefer you work with a bigger bank, and there's ways to be able to set your credit up so you could get approved for those even after you've had credit issues. I actually created a program for that. It's called Credit Restart. In our profile, you'll see a link where you can get information. If that's something that you have experienced or it's something that you want help with, that's very powerful because it helps you lay a foundation and helps you kind of navigate the pitfalls, because there are a lot of pitfalls after you've had bad credit. Now, Back to the open lanes on the highway. 5 to 7 accounts. Keep them open. Do not close them. One of the factors that gets factored into your credit score is the AAOA, average age of open and active accounts. You want that to be as high as possible. So if you're somebody who jumps from card to card to card, just like somebody who jumps from job to job to job, they're not going to see the stability they want. They want a long track record. So whatever you open, don't close it. Keep it open. Multiple ones. Keep them all open. You're building a foundation in the background. You can use them once every 6 months. You don't have to carry balances. And now let's talk about the other huge misconception. Where should I keep my credit card balances? So it's a loaded question because the answer to that question is it depends. It depends on what you're trying to do. Are you trying to purchase a house? If you are, then what you want to do is actually just have one card with a balance. The ideal way to position your credit card balances, if you are trying to purchase a mortgage, is a strategy called AZEO. All zero except one. The mortgage FICO score that's currently being used is very sensitive to AWB, which is accounts with balances. So if you have 5, 6, 7, 8 credit cards and they all got little balances, not good for your mortgage FICO score. AZEO, you get them all to zero except one. And now the question is, well, what about that one? Where do I keep the balance? Under 10%. Ideally, you're at 1 to 3%. That is the formula to give you the highest possible mortgage credit score. And honestly, it's never been more important to have your score as high as possible. So you are going to want to position for AZEO if you are trying to purchase or planning on purchasing. Now that question is, well, when do you do that? You don't need to do AZEO. If you want to purchase a year from now, you don't have to do AZEO. Use your cards as much as you want. As long as when the time comes, 30, 60 days before, that you can bring the balance down to AZEO, then you're fine. As far as credit card balances and threshold, look, the lower the balances, the better, but that doesn't mean that you don't want to use your cards. If you're able to take your card up to the limit, keep it maxed out for 2 months and then pay it off in full, do it. It's not going to hurt you. It's actually going to help you because the credit card companies actually have internal metrics where they're measuring your risk as well. And what they're interested in is not somebody who just opens up a credit card, has a small balance, and that's all they've ever done. They like to see capacity. Meaning you take it up to the limit and you bring it back down. You do that several times. If you can do it several times in a month, even better. That's the fastest way to get your limit increased because you're demonstrating the ability and capacity to manage the limit they're giving you. That's going to make them that much more comfortable to give you a higher limit. But you have to be able to do that. If you're somebody who just maxes out your cards and you just pay the minimums every month, they're going to rate you internally as, hey, this is high risk. Because they've extended all the credit that they have and you've already used it all. And now you're just making minimum payments. You do not want to use the cards that way. You want to bring them down. And if you go up, make sure you can come back down. And if you're going up on all of them, let's say money is tight, try to stay below 50% on all of them if you can. And if you get to that point of 50%, you want to start looking into debt consolidation loans because the moment that you decide to look for debt consolidation loan, if you're at 50% utilization, your score is going to be still strong enough to actually get really good terms. The single biggest mistake people make when they have credit card balances and they get out of control is they wait until it's too late. They're maxed out on all the cards. Score drops, options are reduced, and now options are reduced and are not as good. That's one of the most important parts when it comes to managing credit card debt. I've told you how to use the balances. I've told you how many cards to have open. And the other thing that's also going to make it rewarding is when you have the open and active accounts, when you've got 5 or 6 accounts that you've had open for 5+ years, guess what? When you do open up a department store card, because you take that 20% discount at the register, it's not going to hurt your credit that much because a new account showed up because you've got depth. And also at the same time, if you don't like the store and you want to close that account, you can close it. It won't hurt your score because you've got the foundation. But if you only have one credit card open and you open up a second and you close that second after 3 months, your score is going to go down. So that's it for this video. I just wanted to tell you guys about credit cards. The biggest question is how many should I have? How should I use them? What matters? What doesn't? And hopefully I feel like I've covered all of that. If you guys have any questions, leave them in the comments. And also if you like this video, if you want to hit subscribe, I really appreciate it. If you have any questions about anything credit, leave them down there. There's also a bunch of info in the links if you want more information about anything related to credit. Thank you so much for watching. I enjoy putting these videos out. I'm going to be putting out more and more videos. So stay tuned. I'll see you soon.